Hey guys, welcome back to another trade breakdown. It's the 3rd of October, 2023. London session, we actually didn't take I didn't get any trades. There were some trades, but I didn't take any. So I'm going to go over that, but then managed to pull 2 trades during gold at NYSE. So I want to cover those because I think they're good learning points, not just for you, just for me as well. Because I'm going to pretty much skip over German 40 for London session. But let's have a look. This is German 40 right now. Okay, so I did make a mistake where I figured. So this is the lay of the land at the time. I didn't have this zone marked up at the start. I was kind of hoping to trade from this level, from this 15,100 level up, expecting this to be like for a sell, but the move happened way before I got up. And then it had that rejection. So I was a little bit disappointed about that. So, but the zones I did have planned, I thought we could definitely push up to the Asian high. I love this rejection area. I think that's really nice. And then I had this area on as my liquidity wick. So I actually even said in the stream that what I was actually expecting was, given how we pushed up in this pre-London time, what I was marking up was I was saying, I think what we're going to do is we've got all the trend line liquidity this sweep, but we've got a beautiful Asian high area that we can target. And I was thinking that we could push up, come down, and then push up. And then from here, we'll have to see what's going to happen. But then if we can push up again, this will be the high of the day, and we can push down from there. And that's exactly what I drew during the session. Now, what actually happened that I missed, I actually didn't draw this little bit. So this here, this got no bottom wick, well, very little one, no bottom wick. So the move that we had on Monday was we just took out the high, and then we pushed down, and then we paused for a little bit, and then we started pushing up again, and we got the trade inside of here when the price was hesitating, and then before it did the push up to go retest the high of euro, and then push up to this beautiful Asian high area. What happened this time is when price wicked down, I didn't have my eye on this, and this candle, it moved down. You see, this is 1 3-minute candle. It just wicked down and then wicked all the way back. So by the time that it wicked down and showed me that this is the area that it was reacting from, I was like, oh, my eyes didn't pick it up initially. It actually makes a lot of sense because this, I don't really look at this too much in the Asian session, but that is a beautiful resistance and then a confirmation of that resistance right there. So that was, if this is resistance, then it makes sense for it to be support. So, that's the beauty of going through these trades and seeing. Now, the difference in this one, if I go back very quickly and show you yesterday, the difference was when we, holy, it's Thursday. Monday, yeah, this is it. So the difference here was this when we opened for London Open, price wicked down. Notice the same thing right here. You got these 2 candles that have no bottom wick. Okay, so beautiful area for it to come back to. But we had a 3-minute candle push down, a 3-minute candle stay there, and then we got the trade around this point to push back up. Now, the difference between that one and today was it didn't, move that. It didn't hesitate here. It was all over within a couple of minutes. Then price, once it picked up that liquidity, it was then able to, I did a little retest. I didn't take the retest because it already hit this little zone. And then price started to, it just did nothing, actually. Yeah. That was after it pushed down and then came back up. That's what I was saying, that I would like to have retested without actually touching the 1 minute. It was this candle right here. So as it pushed down and hesitated, I really wanted it to come back down first without actually touching these no wick candles. After it did that, I wasn't really sure which direction it was going to go, to be honest. So I stayed out of it. Then it just ranged. It just ranged for a good while, then started to push up. Yeah. Then it pushed all the way up. It was just slow. It was just this steadiness didn't really give me much confidence to take a trade. Plus, it was German bank holiday, so I was talking about that. I was thinking, oh, it's a little bit just doesn't feel right. So missed it all. Then price did came up to here, but I was finishing the stream by that stage. And then it did a little retest and gave you a perfect one. But that was outside my trading time. So I didn't get to partake in any of this really. I did take a little buy inside just off this. Once it pushed back down, that was when I got back for 20 pips. Thinking that we might push up a little bit higher again, but it just fell off, fell and fell and fell and fell. So it was okay. It was like, didn't really, bit of shame that it didn't get into this move. There were some people that did, but it was, there was some good moves here. And this was something that my eyes failed to register initially. Now let's go over to gold, because gold one was pretty interesting. So what gold was doing was, if we look on the 30-minute chart, and what I'll do is I'll just hide some of the data. Let's get it back to about there. Now, what I was looking at, this is something that I think would be interesting for you, is that if price is ranging like it is, up, down, up, down, up, down, up, when it's ranging here, don't get fooled into thinking that, like, it's obviously a range. If you want to play the range, play the range. But if you're thinking of liquidity and you're thinking that the area is going to have liquidity above and below, okay, what you should be thinking about is actually look for above and below areas that you might consider as, where did the move come down from that's above this range, and where did the nice move push up from that's below this range? If you can identify an area that when it's ranging, rather than using the range itself, look to see where there is liquidity above and below, because if we do a breakout, we're likely to do a fake out. And it's going to pick up liquidity. It's not going to pick up liquidity below, or it is going to pick up below it, but it's more likely to be grabbing liquidity where there's a whole bunch of other buy orders ready to push price up. That's how they work behind the scenes. They're going to push price down, execute stop losses, which are buy orders. If it's a buy, if it's a sell. If people are buying and they want to, and they've got their stop losses under here, these are sell orders. And if an institution wants to buy big, they're going to look for places where people can, where they're going to be buying from where there's a lot of sell orders. So that's what I did here. I drew some zone. If I have a look at the 30-minute chart, if I go to 1 hour chart, what you'll see is this is the last little bullish candle before we had this sell-off yesterday. And then if I look inside of this area, I could say this is my last bearish candle before the up move. And what I wanted to get one a little bit closer to these lows. So what I did is I had a look at the lower time frames. So I went like 30 minutes, tried to have a little look. So yep, that looks good. That's my little last bearish candle before the up move. But the zone's quite big. So I wanted to refine it even further. So I went to the 15-minute. Okay. Looking like I'm getting closer. Let's go to the 5-minute. Okay, then when I get to the 5-minute, I can see that, but just before price really did this acceleration up, this was my last little bearish candle. Okay, so this is my zone that had below this range over here, and this was my area that I had above the range. Now it was just waiting for volume to come in to do a sweep. So let's go. I waited for NYSE. NYSE is, okay, this one here is closing just before NYSE. If I see reactions off of this little order block liquidity area, makes sense to go long. If I see reactions off this area, makes sense to go short. I missed the sells. I got the buys though, but this was the first 5-minute candle, closing nice and bullish, liquidity candle, picking up, just pick up liquidity. Simple as that. I didn't take an anticipation entry because NYSE can come with a bit of volume. So I wanted to wait for this candle to actually close bullish. Once it closed bullish, entered on the little candle that pushed back down. Okay. And then anticipating then we can continue to push up. So this was the trade. Why I was looking for buys also from here is because I got a very clear target. This no wick. So it made sense to come back to this zone. So that was where my take profit was. Okay, price smashed it straight up. And then it was just too quick. This reaction down was too quick for me to enter sells after I'd been in that buy. So that's why I missed the sells, but it made sense for this area to react. I was hoping that price would then push down and maybe I can take sells underneath 1820 again. But something happened I want to discuss. So price, okay. This was news, okay, 3 o'clock. 3 o'clock was news. Then price pushed down. Then we just went a huge, humongous push back up, okay, reacting off of this little blue zone that I had. Now, fundamentally, this is what happened. We had Japan after this news, with the back of this JOLTS job opening news that happened at 3 p.m. UK time. This push, which was good positive numbers for US dollar, what that did was it pushed US yen up above 150. Okay, 150. That was what happened last year, the same time, almost 12 months ago, actually, October last year. That's when Japan intervened in the market. And just basically what they do is they dump a whole bunch of US dollars from their reserves. And that just drops it just adds so much supply into the pool so that the value of US dollar dropped. That's the intervention. So when that happened, I was like, oh, well, if there's going to be a lot of US dollars just being dumped initially, and I had a beautiful little zone here, I thought, well, if we're forming if we're pushing up with US dollars with that in mind, I think we could probably hit 1833 with it. I just needed to see a bit of price actually be bullish. So that was my thinking. I had to just pivot on the fly, thinking of the fundamentals, thinking of what the implications of that's going to be. So let's have a look at the 1 minutes, because that was where I was watching price. Price pushed up, came back down. Okay, just letting it settle a bit. Okay, price pushed up again, took out this no top wick. Then as it came down, I wanted to see some bullish rejections, just the same trades I normally take with liquidity candles, etc. So price coming down. Okay, just want to see like a little doji or something, or a bullish candle like this. That one there looks, that one looks great. So enter, little pullback. Okay, and then after we had a couple of these little rejections, made sense just to enter into this trade and then target. I wanted 1833, but from where I was entering at 18, I tried to enter on this wick 1825.7, but spread put me in a little bit higher. But this move here was like 50 pips, so that was my target. And I thought, don't want to play with it, and just blast it again. So just a beautiful example of like fundamentals and volume. Just so good to see. Then we've just been ranging ever since then. But at that same time, okay, I'll show you quickly US yen, because that's, I think, a pivotal reason why I took this trade. Last year, okay, look at the day. This was October 21. Once price pushed up above 150, Japan intervened in the market and had a sell-off. So we haven't been this high again. Look how long it's been since 2002, before like where the dinosaurs were. Price has never been this high, since this century, since price was here, where they intervened. Price came back again. They must have had a massive order just ready to go. And they've been talking about in the news that they might intervene if it gets to 150. And sure did. Sure did. Look at this 1 minute. Look at this 1 minute. So price pushed up with the back of this news from job openings. 3 o'clock, price pushed up, went above 150, and then look at these 2 1 minute candles. Okay, 2 1 minute candles, 270 pips. Holy man. So if they're flooding US dollars into the market, you'll see US dollar value go down. Hence why I thought it's good to get a quick little buy on gold and then just cash out when you get to the top of structure. Top of structure is right over here. So there you have it. Nice recap of the day. And if you like it, give it a like, give it a sub, hit the bell, get you notified when it's happening. I'll be doing hopefully I'll be doing a live stream tomorrow morning. So shall see you then. Bye-bye.